One is white fat, and that's probably hanging out on your belly right now. It's extremely hard to get rid of. And then there's a lesser known type. One is
Are
white
you
fat,
ready
and that's
to
probably
embrace
hanging
the
out on your belly
unknown?
right now. It's extremely hard to get rid of. And
You
then
are in a position right now where you have got to make up your mind and understanding what it's going to take to get through whatever adversities that you are facing at this time. The challenges that you are facing,
What is up, everyone? How's everybody doing? Hope your weekend was great. I'm sorry if you're the Chiefs fan, and congrats if you're a Bucks fan. That was
Let me share
some.
my video, brother.
What's that?
Let me share my video.
Oh, did I disable it? Here, hold on. Yep, I got it. So Ryan came over to my house, and we watched the total annihilation of the Chiefs. It was a very boring game.
Yeah, go
But
Bucks.
Ryan got his laughs. Well, we both know who we voted for. Now I gotta buy that guy a donut. Anyway, welcome everybody. So, Kid, can just real fast before we begin, going over the markets. Don't worry, you're not missing anything because markets are dead today. My belief is they're waiting for the stimulus decision. Let's see, someone just messaged me. Yeah, so you know, it's okay, but I wanted to everyone who is brand new to smart money. I just saw one single 111. So type in 111 if you have never traded smart money. Um, and you know, for some reason are not profitable or other way profitable with other strategies, which I'm not gonna bash you just yet. Um, but yeah, Kevin, what's up? No, I am. Yes, exactly. I am the Lord. It's actually true. I am. I bought that little stupid thing on Instagram. I own 1 foot of land in Scotland, so I'm officially have a title of Lord, if you must know. But I just love Game of Thrones, dude. It's no big deal. If I was a character on Game of Thrones, I'll probably be Ramsay. So be aware. Yeah, so welcome everybody. Okay, so I see someone on one. So first this is how we're gonna structure it. I'm gonna talk a few seconds, minutes about mindset. Then I'm gonna go into some crazy trades that we were able to catch last week, using the concepts that we teach and some advanced concepts that will be discussed in the bootcamp. And then we're going to go into basics of smart money for all the new people that have never traded it, so we can blow some minds. That would be the most boring section for our actually, you know what I'm going to do? Actually, going to go over a couple of pairs of what I think is going to happen um, next week, and our opinion of what to expect, some setups possibly, so that way the people that are veterans already and know how to trade smart money, they can chill and feel free to leave after that. And I will go over the basics for the new people and then stay up for some Q&As. All right, so before we go into everything, just a few things. One, we're not financial advisors. We don't claim to be financial advisors. So if you take any trades that are being discussed here, it is all on you. You're the one who holds the damn joystick, we don't make you press any buttons. So blame only yourself. And if you lose a trade, it's your own fault. If you win a trade, it's because you pressed the button. I didn't do anything. So don't hold it against us if the trade doesn't work out for some reason. We're not gods, even though I am a lord. Let's see what else. Second thing, on March 20th, myself and Mike Azevedo are going to partner up for a one-time ever bootcamp. This is not for beginners. This is for people that are still struggling to win consistently, but trade smart money. We're going to go over mindset, structure, divergence, and Wyckoff in an extreme environment. It's going to be 4 hours, dead on the charts, some theory, of course, but mostly it's going to be example after example after example after example, so that you have full system and can really engage. That's going to be March 20th at 3 p.m. Eastern time. So if you want to get on that, it's paid. The cost is $300, and like I said, it's 4 hours. It will be recorded, so if you can't make that time, you will still get it, as long as you register. And then what was going to say, it's going to be capped at 500. And yeah, if you want the link, just go to my Instagram or Furious Snipers LLC Instagram. It's in the bio. Ryan, would you be kind to put our Instagram handles in the chat?
Yeah.
Okay. Let's go. I'm gonna put them on the screen. Just bear with me, and I'm gonna share the screen. I know I'm not sharing. If at any times we get disconnected because of my horrible internet connection at times, even though it's supposed to be a terabyte freaking speed, it's got fiber. I don't, no worries, we'll reconnect. But here's the links. Bam. Okay, so the three, three: follow us, like us, ask us questions, send or whatever. If you want to join the squad, message us directly. If you want to join the bootcamp and have some questions, don't hesitate. All right, I'm just gonna put them here. Cool. All right, so I am one of these people that I'm very direct. Maybe part of my problems and burned bridges are because of that as well. But it is what it is. I'm me. Apologize if anyone's offended by the song that was playing or the second song that was playing. If you can't handle the truth, maybe you're, still need some growing up to do. But in any case, mindset, in my opinion, is the only reason I ever still lose trades if I'm not in the right mindset. So with that, I mean, mindset, it can be comprised of a lot of things, but the basic things remain the same. You're either A, greedy, or fearful, or impatient. And I think my biggest thing is impatient. Now, if you're struggling with greed, which is like, oh shit, I have FOMO, I need to get in, I have the fix for you, right? So if you want to fix the greed without actually fixing yourself, although I do think everyone should tune into Mike Miles if you're an IM, and really work on yourself anyways, if you're anybody. But if you don't want to do this and you can't change for some reason, because it's hard, I get it. I have devised a perfect way of putting a patch on, like a nicotine patch, so that you're okay, you're FOMOing, and yet you're not losing. So the way to do it is, and again, this is not for the people that have $100 in the account. If you have a $100 account, that's not going to work for you. But if you have at least 1,000, I think it should. So if you're at some point looking at the market and it hit your entry, but for some reason you didn't have a pending, or you just missed it, or it had a super fast reaction, and you still want to get in because some people are posting or whatever it is, and you just feel like getting in, but you're not going to do your justice if you do, because it's going to be horrible entry, just put 0.01 there. Just as fast as you can. Just get to the market, just put 0.01. Okay? I know it sounds funny, but what it does, it gives you dopamine, and it essentially releases chemical in your brain that you're satisfied that you got in, right? I call that my research position. You don't have to do it. I'm just saying that's how it helps me, because I still get impatient. I'm an incredibly aggressive and competitive person from, the roots. And sometimes I get in this like, oh my God, he just caught 500 pips on gold drop, right? And I want to get in. So I just go 0.01. The worst case scenario, it's going to go 500 back and I'm going to lose $50. To me, that's not much money. I trade now 3 6-figure accounts. So it doesn't mean anything. So if you're really itching and you have a little bit of money in the account, and 0.01 is not really going to hurt you if it goes 10, 20 pips against you, just do it. And it will help you. And then when it gets to your actual entry that you researched and worked on with your strategy confirmation list or smart money confirmations that we teach, then you enter correctly, and then that little 0.01 is not going to matter. And in the other case that it does work out because you got in late, but it still kept going in your direction, you're going to be like, I wish I put more. But on the other hand, you know that in deep in your heart that there was no business for you in that position, and $10 never hurts, or whatever it is, $5 never hurts. It's $5 more than you had. So that's just something to battle greed, right? If you want to battle fear, what you need to do is learn risk to reward. And my biggest advice to you in this case is reduce your lot size. Reduce your lot size, not saying 0.01. If you're already trading 0.01, then you can't reduce it unless you trade Oanda. Hint. Because they do it in units, so you can technically do it way less than 0.01. You can do 0.0005. But anyway, so reduce your lot size if you're fearful. But in general, if you trade these concepts, I am averaging my average position win is like minimum, not even averaging. My minimum is 1 to 10, right? Which means I can actually lose 10 times, win once, and still break even, right? I will never be worried anymore. I'm never fearful about about losing, right? I lose all the time. But every week, every single week, I'm in profit. I'm making bank. I'm doubling accounts. I'm changing lives. I'm helping people pass FTMO. We got to this point now, I think 12 people that passed FTMO, 3 more in the making. So, and FTMO is just one of the firms. I'm about to be sponsored by Funding Talent. But anyway, so my point is, I'm not worried about losing. Losing is part of the game. But the fact that I'm losing, personally, I'm losing anywhere from 0.1 of 1% to 0.25 of 1%. And on my personal account, 1% always. I know I can't lose more than that unless some unexpected new tweet comes out that, slips through my stop loss for some reason, which could happen, I guess, but most of the time it doesn't happen, right? So I know what I'm going to lose if I lose. If I lose, I'm going to lose 1% on my personal account, right? And so, but if I win, I know that my win is going to be at least 1 to 10. My biggest stop loss in these days, and Ryan's and our squads, is never above 10 pips. Like, that's an absolute max. But like mine usually doesn't go above 5. That way I can actually increase my lot size. So that's how you handle fear. You get confidence. You get confidence by not losing a lot, by losing a fixed amount. If it's fearful for you to lose that money, reduce the lot size, lose less. That's how you get over fear. So my only vice in my mindset is impatience. What I mean by impatience is I have everything marked up and I have everything ready, but the market closes or the market turns around way too early, or it's just close, but I not willing to wait for that one little spike. But I got around that too, personally. I don't recommend doing that. What I recommend doing is listening to Mark Douglas in your ear, saying to be trading in the zone, and waiting for a confirmation. But what I devised is, again, you can stack your entry all the way up to where you're supposed to enter, and that's up to the person how many lots and all you want to risk and whatnot. But when it gets to my entry, I'm gonna be good because I researched that entry. I spent time on that entry, which brings me to the last point. In order to completely be emotionless in the market, all you need to do, not all you need to do, you need to back test. You need to practice. You're not going to get good. Watch 7 of my videos, attend 500 boot camps from all different educators, learn from Reem himself, learn from WWA, learn from Mike Azevedo, learn from Ryan. Doesn't matter who you learn from. If you don't practice what you just watched, if you're not on the charts, if you're not taking notes, you're not going to succeed. I'm sorry if it hurts you. You're not going to succeed. You will fail. You will blow your account. It's just a matter of time if you don't practice. You do not become good by watching videos and listening to someone. You get good by doing it yourself.
By being obsessed.
Yeah, you gotta get obsessed. You gotta like practice and dream it. Like every night I dream about this in my head, like freaking market moving. So it's the only way. It's like saying, hey, I'm gonna lose weight because I watch Arnold Schwarzenegger. Yeah, you're not. Until you get on the treadmill or whatever your sport is. All right, I'm gonna get off my renting horse right now.
One thing to add, I want to go into back testing. When you start to back test on a regular basis and take notes on what you have done, or maybe your emotions or what you're kind of looking for, your confirmations, you'll actually find out different things you're not good at. And then you have the ability to research those, but you would never know that if you didn't actually put in the effort. And then also sometimes you just find out new things you've never even thought about before, and you can actually test those. And it's amazing how quickly you'll grow. I always kind of relate everything to sports because that's kind of what I've been involved in, but you learn different techniques and different things that maybe feel right to you, mental exercises. It's amazing how fast you'll actually grow. I remember talking to different people when we first started all this and talking about how, like, what have you done after a few months? What will 6 months from now look like? What will a year look like from now? What will 3 years look like from now? And the simple fact is that you're actually, when you start looking back on your progression, it's almost laughable what you were before if you actually put in the work, and you wouldn't know that if you didn't back test and you didn't log and you didn't journal and all those other kind of things. So it's really, really important to anything that you do to do those kind of things. Another reason it keeps you accountable, and accountability and discipline is the keys to any part of success. It doesn't matter what you're going to do in life. But and also make yourself a schedule. Make yourself a schedule. I will dedicate this time to this time to back test, or I'll do it so many times a week, so many hours a week, and actually put it in. Kind of like you actually, even if it's not your job, act like it isn't a job. Act like it is a job. Act like it's an appointment that you have to make, that you can't break. And if you do break that, one thing that you can do, and this actually helps, and you could actually fine yourself. In other words, you have to pay money and put it in your savings account from your checking account, and keep your accountable monetarily. It'll be amazing how that mental game will actually transgress into being more disciplined.
Yep. Good point, Ren. So, all right, now we're gonna go into actual charts. Who's excited? All right, so this was by far the best trade of last week, and ironically enough, it happened on Friday. And for those of you who are in my squad, you know where that trade came from. Divergence indicator. Out in public in 1 week, possibly. We fix everything. Anyway, so yeah, this was icing on the cake because I was watching this for a while on larger time frames and all, and to me this was distribution when and confirmed when we hit the MSAO. This was weird, but I kind of thought about this little wick here, and I thought about it originally as UTAD because it did break structure so violently, kind of. And but then I was like, well, maybe this is reaccumulation. I don't know. So I was very weary about this because it did take Asian highs. And don't worry about the people that are new to smart money. This will all make sense when I this Wyckoff will not make sense, but what I'm saying, some of the terms I'll explain everything when we go to the basics. So just try to stay along for now, repair your questions. Speaking of which, all the questions, please put them in Q&A. Ryan, are you watching YouTube?
Oh, let me pull it up. I had it pulled up earlier.
Yeah, make sure that
There
if
we go.
there's questions there, pick them up there. If
Right.
there's questions here, please post them in Q&A so we don't lose them in the chat. And for someone who asked, I don't know when the question was posted, but yes, the bootcamp is going to be recorded. I'm sure it will be leaked at some point, and I don't care. But it will be recorded, and you will get the recording if you register for sure, 100%. I do believe that a lot of stuff is going to be like when you see it, you'll be like, oh, I wish I could see it again, rewind it and watch it, maybe back test it and all. So I realize that, and because we're not going to do a boot camp again, most likely, we'll see how the turnout is. We might do it in the future, but so take it one step at a time. Anyway, so this was, like I said, distribution in my mind. Now I do think it's still distribution. I think we're in redistribution, but we'll discuss it in a little bit. So this was an awesome divergence confirming everything. So as you can see, GBP NZD and GBP AUD, they're correlated pairs. They're, GBP is the same, and AUD and NZD are very close to each other in value, economically, geographically, everything else. So you got both of the pairs gaining strength. GBP is gaining strength because of the whatever they had. News came out on Thursday, and all GBPs just skyrocketed. I don't know if anyone remembers it. This was one of awesome nights because that's when my GBP streak started last week with GU. It's nothing like the feeling of waking up and seeing everything already closed in blue and your equity going up by 10%. Nothing like the feeling, I'm telling you. It's like, okay, I'm done. But anyway, so this was pretty awesome. And I just closed the position because I'm gonna probably get in here again later. But like I said, I'm impatient, so I got my 160 pips. I'm freaking satisfied. Anyway, so this was gaining strength and took liquidity, as you can see, took a lot of levels, 2 levels of liquidity here. Boom, 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 boom. The FU candle, whatever. This one took liquidity earlier during Asian session, and then the mitigation happened here, and all I needed to wait on 1 minute. Since I already knew this was distribution, or at least on a small time frame, it definitely is. All I needed to wait for is the break of order flow, and technically got in over here. Break of order flow on the minute, failed higher high, and we dropped. And the risk on this was 3 pips, and I went for 160. So there you have it. Calculate in your head what is it? 1, 2, Why can't I count? 3 to 160, so it's like what? 1 to 60 or something. I don't know, something good. Something good. Once I start posting on Instagram this week, I'll probably figure it out. My head is fried. Anyway, so that was the first trade that I wanted to show. That was really, really cool. And now, just to say it right away, we got into this IFC order block here, filled the imbalance, came here, and I do consider this on a smaller time frame a redistribution because we're playing with the highs, yet keeping the lows pretty much intact and equal without much volume. And we have this lower high that keeps the bearishness. So, quick pop over here. This, if I'm wrong, again, like this is how, right? If I'm wrong, I'm going to lose 5 pips. If I'm right, it's going to go all the way, ready? All the way to here. Because this is on the 4-hour, that's the low that maintains bullishness. And that's the big IFC at this 1.7620-ish level, quarter point, whatever confirmations you need, that it's going to come to, taking all of these early buyers. That's what I think. I'm going to be changing my bias if it breaks through that and comes and first fills this, or if this is some kind of, already mitigation from this candle here and it's just going to go higher because this is not distribution, but a reaccumulation for some reason. But for now, I am bearish on this and up until here. So if I get in again, this trade will be 5 pips risk to go for 247 pips, which is 1 to 45 risk to reward ratio. I'm cool with that. Are you cool with that? I'm cool with that. All right, so that's the GA trade that worked out. The next best thing was EJ. Now on EJ, if we go from top down, this was a reaccumulation. Okay, came to the breaker. For those of you who know breaker model, perfectly to the breaker, sweeping this liquidity. Again, this is one big lag from here on this higher time frame on like daily. It's got the low, the high, the higher low. So we're expecting the higher high higher. So I was bullish. I was looking for bullish setups. But that's 4-hour, right? So we were here in last week. And then on 1 hour here, this is what maintains bullishness. That's your low, that's your high. We came back here. I wasn't sure where it's going to go here or lower, but see my labeling already. This is Wyckoff accumulation phase B, right? Second one, accumulation 2, without the shakeout. And again, you could do bunch of stuff with order flow and break. You could do simple structure and wait for this break of internal structure here, retracement and buy here and catch that move. But knowing me, I waited for our divergence indicator to say divergence between EJ and EU. Actually was beautiful because we were doing the session on the Thursday night with our guys. I was doing a Thursday night session, makeup for Ryan's actually, which was funny enough. There's like 4 people that showed up, and out of however many we have, 70, 4 people showed up, and all 4, or I hope all 4, got into this divergence. The risk on this was beautiful, 3 pips, because I was saying the time is wrong. There is not real clear mitigation. I do think this is accumulation, but if you look at Euro USD, it was incredibly clear. This, oh, by the way, last week was boring until Wednesday.
Yeah.
Wednesday fireworks started. Thursday and Friday were phenomenal, but until Wednesday, it was like market was absolutely sleeping. For me,
should have another big Wednesday too coming up.
Yep. So you can see once again, Euro, JPY and USD are correlated pairs. That's why UJ doesn't move much, but you can see we're on a downtrend. So we're making lower lows, lower lows, lower lows, lower lows, lower lows, lower lows. And then we have the accumulation. And at the same time, this one is making a higher low, showing strength against the JPY, while Euro, it was still showing bearishness. So you could have gotten in here, or if you like Euro, USD more, you could have waited for this impulse and got in on the breaker model here. This has been harder to get in because I personally would have waited here and would have not gotten filled. But this was a sure entry for me because the stop loss was minimal. And of course, Friday, I had to close the trade because that's what you got to do on FTMO. So I closed it somewhere here at New York when we opened, securing 1 to 20. So that was pretty awesome. Let's see. The gold trade was absolute insanity again. I missed the sell. To be honest, I missed the sell, but I got into a buy right here when it started coming in, recognizing accumulation. And unfortunately, once again, closed it on Friday somewhere here. I was actually expecting it to go down from here at first, but then I realized it's already Friday late and I just let it go. I did have a stack over here of 0.01s. They all hit stop loss. So like I said, I lose sometimes, but that didn't matter, right? So now I kind of am thinking we're ready to drop again. I even talked to Mike about this, but he said there's no clear range, and I agree. So what did I do? I put a couple of small positions over here. So I'm kind of killing two birds with one stone. I'm like telling what's going to happen or what I think is going to happen at the same time that I'm talking about previous trades. So on 1 minute, this to me kind of looks like distribution because we did break this and then again, and we're I don't know. This could be a complex pullback to jump higher, which is why a small position, I'll show you what I'm seeing here. If I lose, I lose. But there is this candle here and this candle here. So if I don't get triggered, I don't care. Because it's kind of looking like, honestly, like accumulation now again. So because it's just moving slowly and then just probably will skyrocket, but we'll see. We'll see what happens. Reason being is I'm not convinced we're bullish yet on gold because we kind of hit it on the daily, but we didn't come to the extreme area, which I like to come to. So we didn't quite make it low enough for me. I think we're gonna go all the way to 1780. The other thing that why I think it's time to distribute is because of redistribution here. So we had redistribution here, and now we gotta get out of that redistribution. So at the very least, we should have a pullback to here, which is pretty significant. Even if this is reaccumulation, I think it should fall here before moving higher. Because we got to get out of the orders that are here. So maybe it's not going to do this. Maybe I'll just do this. That's still 1 to 12. Like I said, minimum I do is 1 to 10. This is 1 to 13. So I'm going to be fine with 1 to 13 on a smaller position. All right, there's some stuff in the chat. Take you higher, wondering if yeah, so Ryan Manley, definitely bullish on EU, definitely bullish on GU as well. We'll go into that in a second. All right. So one more trade is NASDAQ that I was able to snatch and snack on. NAS. That was something super awesome in the middle of the week. All right. From my guys, who sees the beautiful divergence? Or from anyone. If you know the answer, you guys can annotate. Can they annotate? I don't know if they can annotate.
We should be able to if you allowed it.
Let's see. Is that only for participants though? No, it's allowed. It's allowed. Can anyone see divergence? Yes. Haha. Okay, fine. I'll just mark it. So I think Ryan got it there. Ryan Manley. Gabe, you see it. Okay, cool. At 12 o'clock. Yes, I'm glad you guys are getting it. I'm glad you guys are getting it. This was also on Wednesday night. Personally, I missed it, but I woke up in the middle of the night. Right here at 6 a.m. Actually, it wasn't middle of the night, I guess. But it was 6 a.m. and I just snatched an entry as soon as this candle got engulfed. So it was a little bit higher than I wanted to, but it was here. And then I just got out here because I was bored. This was just not fast enough movement, but it still was pretty damn good. You know, that's 100 points, risking like 10. So again, 1 to 10 was pretty good. So yeah. Then I saw just now this, and unfortunately I wasn't trading anymore because I was at work. And Ryan, remember I showed you this morning this NASDAQ thing going?
Oh yeah.
Yeah. So again, this kind of against structure because we're like always bullish on indexes, so it's much better to look for buys than sells anyway. But there was a sell here, and now I don't know what we're doing. I actually sold again. Oh, it's about to hit my profit. Oh man, I like this. I sold literally. Where did I sell NASDAQ? All right, now I gotta look. Oh, this is good. 13,697. 13,697. Right here somewhere in the wick. Cause this is so hard to see. Sorry guys, let's see. Because to me, so they're probably a little bit off with the numbering. It's not matching the, yeah, okay. So let me see. Yeah, okay. This is 5 minutes. Okay, that makes a little more sense. Right here. Right. So I saw this as literally UTAD to this distribution is what I thought. Now I'm not so sure. I do think it's reaccumulating again. I'm gonna get out of the position right now, close it all, and take my little profit and be happy. And maybe I'll leave quarter of position. That's what I'm gonna do. Just in case it doesn't come back, but I'm pretty sure it's, gonna keep going up. Yeah, I'm pretty sure it's gonna keep going up, but we'll see. If I'm wrong, I still have a tiny position. Okay. So yeah, so that was the divergence that was made my week even better. Because Monday and Tuesday was like consolidating day, and like Tuesday I took some losses, like lost about 3% of my account because I lost like, I lose 2. Not ashamed to say it, I lose 2. I lost like 6 times. So Tuesday was a losing day. 6 times in a stack. So it ended up being 3%. So more than I love to lose. But then Thursday and Friday was 11% each. So, go figure. 22 minus 3, 19% up for the week. Finished week pretty strong. So that's why I'm saying I'm not worried about losses, because it takes one win to just erase them. I document them. I journal them. I figure out why, or try to figure out why we lost them. But they happen. Anywho. Okay. I think that's all the trades. So let's talk about the awesome trades that I see. First up, AUDUSD. I don't have it.
Real quick, I want to add a little tidbit on the indices. If you guys don't know, if you're kind of new to indices, they should be reciprocal of what the dollar's doing. So if the dollar is going to be bullish, the indices should be bearish. If they're going the same direction, that could actually identify a divergence. So we can actually almost see that ahead of time. And one thing to think about fundamentally is they're going to drop a third stimulus package. Okay. And that's supposed to happen in March, first part of March. That will add for a micro inflation. And anytime you have an inflation or a price per index, a purchasing price index increase or an inflation, anytime you have an inflation, that actually is good for the dollar. So the dollar should be actually worth more. So you'll see the turnaround in the Dow and the S&P and also the NASDAQ. So keep that in the back of your mind as we approach those. We approach the end of February, early March.
Yeah. I thought it was the other way around, always.
No, as the dollar increases in value, the markets.
No, that is true. What I'm saying is stimulus is bad for the dollar. It's good for the stocks, because people take these packages, they start spending money. They start spending money in the big companies.
It's short term though. It's short term. So long term, it causes inflation.
Right, with the inflation, but I mean, we're intraday traders. So, anywho, so AUDUSD real fast. So for March, AUDUSD is like, does anyone have any questions? It's bullish as hell, right? So it's bullish on the daily. It's still bullish, although this does look like kind of a redistribution. We don't know. We don't know because we still mitigated pretty heavily out of here. And even though, so right now it's still bullish, right? Because, we're in retracement, kind of, but we're bullish, right? This was the last significant low on the daily. Remember, every single time frame has its own structure. On 4-hour, we are also bullish, but keep in mind this right here is what's keeping bullishness on 4-hour, right? So all of this is nothing but a complex pullback. On 4-hour, we are bullish, okay? Even though it was in a bearish retracement, the 4-hour time frame in general is bullish. 1 hour. Now, 1 hour is a different story. On 1 hour, we're bearish. Okay, so if we go from 1 hour that's bearish, what is maintaining bearishness? And like I said, so Smart money operate on a higher time frame, but they also have their orders in the higher time frame. So this is where the whole push up started from. So for them to move market higher past all of these sellers that they sucked up, they need to come to get their money first. So they will come here, on my opinion. They probably will come here, but for now, we're looking for structure only, and structure on 1 hour is bearish until we break this, until we break this point, because high, low, lower high, but it's in the liquidity zone, lower low. So this here is the lag. Remember, look at the lags, right? The lags, as opposed to just higher highs, higher lows. Here's the lag, here's the lag, here's the lag. That is nothing more but a complex retracement. So as I was analyzing market this morning, we see this liquidity zone, and then we see the area of previous distribution here. Here's the first place, but again, if I'm a retail trader and trade support resistance, where does my stop loss go? In this area, and maybe here, maybe above this wick, previous swing high. So I do like the extreme point much more. However, if you look at this whole structure, it's starting to look like an accumulation, and these are two zones, decisional and extreme, where it needs to come back in order to push price past higher. If it doesn't go lower, like I said, to the extreme there, and does go higher, it needs to come back for the orders here. So my idea, like, this is the wrong time, but it's coming up here. Watch what happens in this place. And personally, I have a pending higher right here. Once again, this is where they crank the market up, swept, look at all this move, crank the market up, swept the liquidity here. Oh, shit, what's going on? Swept the liquidity here, dropped it down, created liquidity for later, dropped it down more. So now they got to come back to where it all came from, which is here. So risking, okay, here it's 15 pips, but we're on 1 hour, which is why. 15 minutes. Oh, let's go smaller, 5 minutes. That's much better. Okay, on 5 minutes. Right here, like, I could really go into this and put a pending here. That's 5 pips. That's perfect for me. 5 pips is my thing. You do you in your trade management plan. But here we go. If I'm watching structure manually, like right now, I'm not putting a pending here. I would need to see a schematic. I would need to see an order flow break to the downside, something. I'm not trying to burn my hand on the candle, but my extreme zone will always have a pending in there, and I will go to at least here. Again, I'm risking, let's say, 6 pips just for the spread. I'm risking 6 pips, and I'm gonna go for 140, which is 1 to 22. And if I get to sell here earlier, again, I need some kind of break and retest. Essentially, like, I want this to happen, right? So if this structure here internally breaks and forms an IFC in here, or if we start consolidating and doing something like this, like a schematic, then I'll watch that on a smaller time frame. Obviously, this is 1 hour. So that's that. I think either that, and then again, if I am here and it gets triggered, or here and it comes all the way here, and I'm not sure if it's gonna break through and come down, this is perfect scenario. I'm gonna be already 140 pips in profit, so I can easily place an order here and hedge it to go higher. If it gets broken, so what? This one's already that much in profit. So I'll just take off some to offset the loss and be okay. Same thing with a lower entry. The point is to increase your equity. The point is not to always win. The point is to always increase your equity. So would you look at this? Yeah, so that's the whole point. That's a setup for AUDUSD for tomorrow. If you're more of a patient kind, wait to see what London does. We are in Asian range right now. Wait to see what London does. Usually if Asian range pushes hard, if it does, it's not really pushing hard, but it's pushing. So this could be some kind of schematic too. So if it's pushing, you know, London does one more spike up and then we come down. So regardless, wait for what London does. If you don't believe pending orders, and then wake up in New York and act accordingly. If London comes here and then shoots down, don't try to chase and sell here. Wait for confirmations here for a buy. Okay, so that's AUDUSD. I am very similar on EURUSD, I think. Oh, EURUSD is up in Vegas already. No, that's not. So here's my setup for EURUSD. On EURUSD, we are bearish, starting from 4-hour, but daily didn't really reach. Like we did turn around, but it didn't really reach here yet. So we're breaking these equal highs, but I already drew the legs for someone else today. So that's our legs on the 1 hour. All right, we had a high. Actually, that's not even correct. That's not even correct. It's probably a smaller time frame because this didn't break. It's just that. Okay, this is not listening to me. Okay, so the lag is actually, I'm getting all kinds of weird tools here. All right, yeah, this is going here, here, here. That's the lags. But if you look closely, and on smaller time frames too, but if you look closely for, this is fully mitigated, and then we get here, we distribute, or I should say redistribute, and this whole thing is redistribution. All right, redistribution, no test, right? No test. Test is missing. Lots of imbalance here. Liquidity sitting right before this imbalance in the IFC. And liquidity 1 just got grabbed. Liquidity 2 will get grabbed probably during London, if not in the next few hours. Then we get here, and that's the setup. I just wanted to come all the way down here to buy out of this extreme. But if it doesn't, again, I'm hopeful that you take partials, and if you're twin trading, take one for profit, and you could hedge here and hedge here if you believe it's bullish, which it could be still bullish. If you look at daily though, look at where we at. What is that? You know what that is? That is supply and demand zone. Right in the middle, this is where most of the orders are. So to me, we're going to be bullish just up here, up until here. And look, even daily shows this perfect. Here, I'm gonna get rid of this so we can see, right? So we mitigate it out of here, right? If you are a smart money trader. But what do you think the rest of the world is doing? They see this as support resistance, this line where we bounced off. They see this as support resistance. Half of the world is out there saying, oh, I know how to trade. Look at me, I'm whatever, 100 pips in profit, 50 pips in profit, whatever it is. And all they did was just drew a line and, oh, look, it bounced off this resistance or support, right? That's all they're thinking. But all the smart money is thinking, okay, we're going to build liquidity. We're going to come higher, grab it, mitigate out of the order here, which is where my sell limit is, right? Mitigate out of here and then drop it lower. And everybody will be confused. Well, I'm not confused. We're only 50% retracement from here. So yeah, we're bullish overall, but I think we got lower places to go from, like this one, for instance. Right? So this bullish move is temporary, in my opinion. Again, my opinion only, right? So gonna take these highs. So very consistent with odd USD extreme. So I wanted to take, this is what I want. I'm gonna react to what market does, but in the meantime, I just have one pending over here. Again, the stop loss here, this one's a little bigger, 14. This is the test account. I have like something stupid, like 250,000 here. 263, see, I'm transparent. That's just me testing out the Oanda integration. I never done this. It's, you know, it's not my main account. This is like 0.02 in here or something. On my main account, I don't even have a pending, or I have a pending, but it's like on 2 minutes. I can't even see. Yeah. Yeah, my pending is like literally right here. So that is probably like 3 pips. And I don't care if I don't get hit, and I don't have, like I said, I don't have anxiety. Plus, I'm already up 1% because of my Nasdaq sell. So it's always great. I don't care what people do. So 21.30, 21.33, 3 pips exactly. That's the stop loss. That's my big account. This one is just more relaxed because it's like retirement money for my kid. Okay, so once again, if you think it's going to be bullish, you can always hedge here and here. But for now, for tomorrow, my setup is, you know, Tuesday usually makes the high or the low of the week. So I do believe we're going to get here, mitigate either right away or with the schematic, and drop at the very least to here, here, or lower. That's EU. GU. Oh yeah, so GU was a perfect. I mean, I was clapping it last week a lot. And clapped here was divergence with GJ, and we got all that. And then I got into this, and then the news came out, and I mean, I even shared it on Instagram. This was freaking beauty over here. What's up, Misael Huachos? Absolutely 100% Kuhn le rules. Guys, please put your questions in the chat. In the QA, not in the chat, sorry. Q&A. Yeah, you definitely use trading stocks with the same trading style. However, with stocks, if you can trade it through your Forex broker, yeah. If you can't, and you trade through like Robinhood or something, keep in mind that unless you're trading options or you have that margin, you'll be only able to buy, not sell. And sometimes you have to do the same trading style essentially on the daily or 4-hour, looking for divergences, white schematics and all. So you got to be patient. So a lot of people right now saying they know how to trade stocks just because it doesn't matter what you buy, it always goes up. You know, so it's not that they know it's just the fact that they're lucky. And that will pass. That right now is actually one of the worst times to buy anything, unless stock would have been doing bad and it's low valued, because everything's up at the top, pretty much. You know, NASDAQ is all-time high, US 30 all-time high, SPX all-time high. So what are you buying? Wait for Tesla to drop.
FOMO.
Wait.
It's all
FOMO,
FOMO.
exactly. It's what FOMO is. They're pumping the price before it drops, and then it will go up. You know, Bitcoin, like, oh, Elon Musk bought 1.5 billion. Holy shit, it's 44 grand. Watch what happens next. I'm waiting. I'm patiently waiting till it gets to my 24 grand, and then 19.5. Then it'll go to freaking 60. Okay, anyway, so what else? What else? GU. Oh yeah, GU. GU is super bullish. I've been saying it for weeks. So if you look, this is where distribution happened. This Batman right here. You see Batman? Batman's scenario, schematic. So we are here, right? We need to fill all of this balance and come to the institutional candle in order for us to drop. And so we're super bullish on the weekly. We're super bullish on the daily. We're pretty much finishing reaccumulation on the 4-hour. So yeah, so GU as opposed to EU is nothing but bullish, like nothing but bullish. So I'm not looking to sell GU under any circumstance until it reaches that thing on the weekly. So judging on 1 hour, this would be a good get into a buy here, drop to 15 minutes. Again, let me see, drop to 15 minutes. There's no real entry here. If you look, we're kind of making higher high, but this is not rigid points of structure. This is noise. This is people impatient going at from support resistance type of crap, trying to buy too early. This is what Reem calls enticement, right? This is nothing. So that's the last point. That's the low that created whatever the high is going to be next. So this one, but that high is not legit because, you know, it didn't even retrace 50%. It didn't even retrace 30 probably. Maybe it did 38 or something. But to me, all of this is clean. So it needs to come down for me to buy it. And 5 minute gives it perfect. That's why I see this is accumulation here, right? This is accumulation, and you can see that is a breaker, right? This was where the structure got broken. This is where we have the SWIC, the imbalance, and then we got the source from everything started from this right here in this area of accumulation, and we ran away. So if it does drop, some people get into the sell. That's great for them. I'm waiting here at 1.3690 for me to get into a buy so I can ride this thing all the way to over here. Okay, that's good enough for any market overview. I'll leave the rest for my squad. And now we're just going to go into basic section unless somebody has questions from the people that are already, you know, legends themselves. Appreciate you all who are on the stream. So I'm going to go over the basics now. So feel free to drop if you don't have any questions for all the elite. Or if you disagree with my analysis, feel free to write that and show your chart and we'll talk about it. We'll talk about it. I'm open for opinions. Everyone's entitled to them. These are just mine. All right, so who's ready? Who's ready? All right, guys. So I'm gonna try to make it as simple as possible for the brand new guys. So we keep what we call smart money is just essentially a big smart word for well-informed operators or big banks, right? realize that the world, unless it's a Reddit hyped GME stock, does not run anything. Don't have enough money to move the market. Unless you know, maybe you trade 100 grand, maybe you trade 1 million, but that's not enough to move a 6 trillion a day market. It's not. It's really not. So big banks, on the other hand, you know, they operating with that, with billions of dollars and trillions of dollars, and even hedge funds, you know, hundreds of millions. And so they're the ones that provide liquidity. What liquidity means, money, right? So you gotta realize that for you to buy something, somebody needs to sell it to you. And that was the whole thing with the Robinhood and all of them, because it seems seamless to you, but it goes through a process for you and me. You go through a broker. Broker has to cover the other side, give you the money until it gets those shares or the what's it called? The other side of the coin. If you're selling GBP USD, someone needs to buy it from you. So broker buys it and then offers it for sale to someone else who buys it from them, and so forth. So anyway, so market newsflash is manipulated. If anyone here thinks that market moves because you drew a trend line or because you learned support and resistance, it's about to be a big awakening call for all of you. Just like the songs that I put that were controversial, but by this guy, you know, everything in this world is manipulated. Most of the content is filtered. You don't have, George Carlin said it best, they got you by the balls. Like, you literally, you don't have freedom as you think you do. Try this, you know, have a conversation with your friend and mention something like Elon Musk, and then go into Google and type EL. The first search will be Elon Musk that pops out. Guarantee you, 100%. How is that done? They're watching you. They're watching you. But anyway, so before I scare everyone away from the stream, man, I did not prepare any examples, but I will find you examples, no worries. So give me 1 second so I can get a great example for everyone to follow. Or am I looking? Oh, EURUSD, okay. Let's go with the JPY. I know, gonna give me a good example. All right, cool. This is fine. This is good enough. So watch this, guys and girls. Okay, so actually, let me before I go. This is good too, I guess. There's so many good examples. Okay, that's fine. So most of the world learns things like head and shoulders, double bottoms, double tops, resistance, support, and trend lines and indicators, MACDs, RSIs, and all of that is unfortunately garbage. Not only that's garbage, it's exactly what they want you to learn so they can take advantage. Because if everybody's doing the same thing and 96% of people lose money in Forex, then there's got to be something up. Something's got to be up. Why is everybody learning the same stuff? They keep showing all these victories, blah, 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 but everyone's losing. Well, because if I tell you to do something, I expect you to do it. So everybody trades here. Look at this, right? Look at this. Everyone sees when this market Let's play it out like this. When it's here, everybody in the world thinks it's double top now, right? And then what do they do? Where's it? What do? They show you are correct. Next part of the world trades like this. Oh, we got a bounce. Now it's a confirmed double top, right? So now I'm going to wait for retest, and it's going to come down, and this is going to be my profit, right? And then you get into the same thing here, where because here it worked, right? You got support that broke here, and then you come here. Now a lot of people, man, this is examples and examples. So a lot of people do this, right? They put their buy here and then their stop loss underneath. So if you're selling here, I'm trying to simplify it. Let me know if you guys are confused, the new guys, right? So what this does when people put sell limits here, right? People put sell limits here, it creates a pocket of money. So everybody in the world's money stop losses are here. And then, so what happens here is when you sell, a lot of people get fearful that they're going to lose their money. So they right away put stop losses in profit here. Right? Those smart people that don't want to lose their money, I guess. But we let's say you might even got away with that, and then boom, it claps you, right? And then people come up with weird things. So there's only two things people do. One is they put their stop loss, like look at this also here, right? So they developed this is actually YCA free accumulation, but they developed all these equal lows, right? You see these equal lows. So everybody in the world thinks this is support, correct? Right? But if you're looking at structure and you understand smart money that I'm trying to explain a little bit, it's been a while since we did basics, I think more than a year. So people do two things, right? Either they have a stop loss of 30 pips or 15 pips or whatever the number. They have a magic number, 20 pips, or they use the previous swing low or swing high to put their money under, right? So what do the banks do? They learned the law that if you sell high and buy low, that's what you got to do. So they actually, what they did when this market was moving, you look how violently it moved down. So people got FOMO. They started getting in the sells here because they don't want to miss out. Then they cranked the market up, and you see this market was, super fast to get up here. So if you look at what we call an order block or an FU candle, it's called an FU candle, or we call an FU candle. It's truly an order block, which is the block in which the institutions got in, because look, here's something you might have not known, but it takes 10,000 lots to move the market at 1 pip, right? So you need 10,000 lots to move it 1 pip. To move it like this aggressively, violently up, that's like 100,000 lots probably or something. I don't even know. It's a lot. So this is normal market behavior. This is where institutions get in. Now, if you learn smart money from someone else, they will probably tell you that the FU candle is the candle that goes the opposite direction before it goes up. If you learn from me, I'm going to tell you it's not. It's actually the last candle that gets engulfed with imbalance. So this candle here, this doji, got engulfed, but this candle is where they place their order. but it got engulfed with imbalance. But in order for them, you understand that if they just if they were cranking out giant orders, the market would just fly up. So they need to hide it, and they need to absorb the other side. So when people were getting into the sell, they were actually buying, right? The first they cranked it when people were buying here, they were selling in order to get people into this buy. Then they moved the market the other way to close out of their drawdown and draw these people out by some of the people get out because they're scared the market's gonna clap them, so they want to take some profit. Some of the people get over here because they're following and they want to keep selling, right? Because their fear of missing out, right? And some of them like, oh, I was wrong. And even the smart operators that were buying, they don't understand structure. They don't understand anything. They just want some kind of RSI or MACD or trend lines show them what to do, right? I'm not even talking about 15-minute traders that put trend line over here, and when it gets broken, try to wait for retest, and it's like a massacre. But anyway, so last candle that gets engulfed with imbalance is where they place their orders. So they come here, then they create this literally manufacture this liquidity. So they manufacture this artificial support level for everyone. So you have people that are at support buying and putting stop losses here. Then you have others that wait for break and retest and selling and getting their asses whooped on the other side. But what they're doing is they need money to move the market higher. They want to buy lower. They need money to move the market higher. So they create this money by you placing your stop losses. They grab your stop losses, mitigate out of previous manipulation area of where they actually got in because they needed to sell to buy. So they got out completely of their drawdown. So all their sells now are closed. They get into the buy after they took your money, right? They got into the buy. And the reason it goes violently down is because your stop loss on a buy is nothing else than a sell stop, right? So these is the sell stops, which creates this movement down, which gives a facade of the fact that it's good markets coming down. But you were right all along, but you were just buying too early because you don't know that their orders are sitting here. So you're rushing in because that's all you learned, the support and resistance. But they're taking your money so they can mitigate other positions, get into the market, and then move the market higher, right? The same thing here. What's an order block? It's the last candle that's getting engulfed with imbalance right here. They come to it once again. They reaccumulate and they move the market higher. And this stuff happens over and over and over again. Then they do the same thing over here on the sell side, right? Because people are selling, they're showing them you're right, and then they're taking the market higher. And the only way to stay woke, as I say, is one, understand where the money sits, understand how retail works, right? And two, understand structure, external and internal structure, and structure will be king into everything. So it always works this way. So you can see this now, like once you start seeing the market this way, you will never look at it the other way. But you need to remember how the people in the world operate. So look, it's the same thing here, right? Everybody in the world thinks this is support. And then when it doesn't work out, people say it was a fake out, right? Now, look at, and it happens on every time frame because market is fractal. Look at this here, right? Right here was everybody. Let's move to 15 minutes. I'll show you. I want to erase everything. It's getting messy. So right here, we got all the people thinking this is support turned resistance. See how it breaks? Support, breaks, resistance, breaks, resistance, resistance, resistance. Then we have this push down. Everybody in the world thinks this is the resistance, right? Because how many bounces? Like a ton. So where do they put their money? Right? They put their money here. They put their money above this wick. Some people stretch it out, put their money above these. So what you're gonna end up with, at best, to where you think support is, which is, by the way, the manipulation on this side, but whatever. Fake out, man. It was a fake out. It's still a support. So they would, at best, you are 1, 2, 6. At worst, you're 1, 2, 2.5. Right? That's how people trade. And so here we didn't quite get there. They created more liquidity here. So you wouldn't have gotten into the trade. And when you get triggered, it's violent. It grabs everything and takes names. Right? This candle eliminates all of these people. And then this just completely eliminates all hope. And you lost. And you're wondering why. Then it comes back to retest the area one more time. And this is where some people that are patient might succeed with even the strategy of break and retest, because you got to succeed sometimes, right? You know, you got to.
It's like the
But-
casino.
Right. Right. So you have to give them wins once in a while. But if you understand the concepts and trade like us, you see what happened on this side is they grabbed this liquidity to go up, and you would need to go to a smaller time frame to see, but I can see from here what happened. It's even smaller time frame, man. I gotta go to 30 seconds for this. But essentially, they moved the market up, broke the internal structures, created the imbalance in between, tapped into the last candle that gets engulfed with imbalance, and took the market higher. So here's the advantage of trading. And I know for everyone it's like rocket science, so I don't expect everyone to understand from the first time, especially since I'm rusty at explaining things for not doing this for so long. But at the very worst that I would do it, you know, at the very worst, because, you know, I'm not looking for 5 minutes. I'm going to be looking for at least this, right? So here's my 1 to 10. So if I lose, I lose my 5 pips. If I win, I win my, and AJ is not a fast pair. If I win my 80 pips, and I'm not afraid to lose 5 pips. If I'm wrong, hey, it's gonna go down, right? If I lose, then I lose. Okay, I know I'm going kind of fast. Do we have any questions for new people? Is that anything making sense? Or is everything like completely confusing everyone? That's the last thing I want to do. And silence has entered the room. Seven. The down candle, forgot what you called it. So the FU candle. All right. So like I said, I want you to stop thinking about so look at this, right? The reason we call it the fuck you candle, FU candle, but in reality it's an order block, is because it literally, that's what it does to people, right? It takes their money one way and then the other way. That's what it's called. That's what it does. It fucks you. So That's why they called it the FU candle. But you know, like think about this, right? Where am I at? Euro USD, man. So choppy. I'm gonna get a new chart. I don't want to lose all the analysis here. Come on. Come on. There's so much more, by the way. Don't think that's everything. I just want a nice, clean example, please. Ah, it's perfect right here. Watch. Who's that? Kuhnler rules, right? So support resistance area, I agree. Kind of, well, this one is, but on the smaller time frame, you're bouncing off here, right? Support, right? Yeah. So you got money sitting here. People buying here, trying to get here, right? They're oh, this is 6 hours. That's why. Right. So right, it's been proven many times that it's support and it's been resistant on the other side, whatever. All right, cool. So they have money on the side. So if I go to 4 hours, oh, right, you see, and probably even 8 hours. See how this goes down movement before the up movement that goes higher, right? So this literally takes out all the people that are putting their stop losses in here before the true movement up is happening. So we call this an FU candle. The same thing, look here, see? The wick reached here. There was support here, right? Support, 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 FU candle. Support, 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 FU candle. Then go up. FU candle that mitigates out a previous FU candle. So if you were trading just basics of smart money, this would be a horrible way to trade because you see this candle is ginormous, especially on 8 hours. You don't look for setups on 8 hours, but you know, you don't know where to put stop losses or anything. But you can see the order block can be a doji, right? Because an order is one line, it's one pipette. So truly an order block, the true order block is one pipette, right? So if it's the last candle that gets engulfed by bounce. So look, let's look at just this area real fast. Here. I don't know if it's gonna let me go that far, probably not, but we're gonna try anyway. This is nasty. Didn't quite hit it. Nope, didn't quite hit it. So I'm not feeling like going to 5 seconds and seeing the order block and out which it reacted. But even on the wrong side, you see, even on the wrong side, last candle that gets engulfed with imbalance comes to it, drops. Because the structure is bullish though, that's why it didn't work out. Let's see. Look, here's why I don't say it doesn't have to be a different color. So this here candle right there, Who was asking? Starts with a K. There's gotta be an easier name, man. Kunla rules. This candle here took out the liquidity, then it went up and took out all the liquidity that was sitting here, like all the resistance here that was sitting got taken out with this, right? Then, but as it was moving up, as this was moving up, this already mitigated out of here. Mitigation means lessening the burden, you know, getting out of positions and creating new positions. So we already got out of this position and then went up. So the last candle that gets engulfed with imbalance above is this one. This white candle gets engulfed, imbalance above. Boom. It comes right to it, to the middle of it. Gets out of drawdown. In the meantime, slamming below people that are dumb, trying to buy here. Slamming below people that are dumb, trying to buy here. And then goes up. So the same thing happened here once again. You see this last candle down before up move, right? And then even though here it looks like it taps into this candle, this black candle, that if I go smaller time frame, it will probably reveal itself as something else. All right, so here's the last candle that gets engulfed with imbalance. It's this. It's that. Where's the snapping tool? It's this candle here. It got engulfed by that one, and there's imbalance between this wick and this wick. Right? It's not this candle because it gets completely mitigated out of. There's no imbalance, but this candle here, you know, has imbalance before this one. So perfectly hits it. News. Oh, you were worried about the news, but if you saw that, if you saw where the last one is, and understood that, oh, what the hell? Understood that this here is a giant liquidity pool because everyone's speculating, hey, look, it's a support, I'm gonna buy out of here. That's where the money sits. We grab the money, then we go up. The news opens and gets you profit right away if you knew what you're doing. I'm not saying it's easy necessarily. I'm not saying that. I'm just saying that this is much better. Right, so taps into that black candle. The reason people explain it that way is because it's much easier to see the black candle on a, especially on a large time frame. If you want to, if it helps you think that way, that's fine. The problem with that is, if you were doing this, where are you putting your stop loss? Do you have to put this whole candle as a stop loss? That's a giant stop loss. You can't do that. I mean, maybe you can with 0.01 or something, but I go for precision. And there's other things like Wyckoff. Yeah, but my problem with 50%, and I know even Mike does it. And first of all, every educator has its own thing, right? Every educator, mine is divergence. Some, you know, Mike's is schematics. If he is structured his way, so it's whatever. But the problem with 50%, even 50% of this candle, by the way, is huge. But the problem with 50% is there's no factual data there, because you can't tell me that there is an actual reason to go to 50%, right? So sometimes it goes to 75, sometimes it goes to 32. It's an equilibrium, so a lot of times it will go a little bit past it or to 50%. I get it, but it's not a factual data. I am going by factual data, which is decisional or extreme,
Yeah, essentially what they're doing is law averages, and that's why they do it. They just basically say, well, the higher probability is in the middle, and that's why they just use it. But again, your stop loss is so much bigger.
So, like any and schematics and stuff, we go into more deep into advanced smart money concept and Wyckoff and stuff. You know, they just help you reduce your stop loss to stuff on 1 minutes, even better. So let's say you have an area which you identified as the potential point of interest, right? POI, and then the price goes in. Like, let's say, here's a good example, right? Let's say you were waiting in this area, right, on Euro USD for the price to come in, right? Again, if you just take this black candle, even 50%, like cool, 50% in this case worked out actually, but your stop loss has to be huge. It's like 40 pips. Like I'm not down with that, right? But if even on 4 hours, which is where I'm at, what's the last candle with imbalance? Is right here. And I know hindsight is 2020, but I'm going on 4 hour. You know, when it gets to my POI, what I was gonna say is when it goes into my POI, then I'm looking for a schematic or a change of order flow or a change of structure and stuff like that. But hindsight, especially, you can see that it would have not hit my stop loss. It would have gotten close, but it came exactly to the last candle against the Gulf of the Gallants imbalance, not this, even on 4 hour. Probably more clear if I move to smaller time frames. And look, now I can reduce the stop loss already. That's my candle. But anywho, other questions.
Sam had a question. That's a lot easier to talk about than type. So
Say
on
what?
the Q&A. Sam had a question on the Q&A. It's easier to talk about than type.
All right, Sam.
It says, how can, yeah, there you go.
The entry point very well as the market unfolds, and you can have spring and no spring for the schematics. Order flow, my brother. Order flow. What is an order flow? You see, my diagonal lines are not retail trend lines. They are momentum trend lines of order flow. So, and they work on 1 minute as well, right? So how do I explain this? Okay, so if you notice the succession of FU candles, of order blocks, whenever we go up, and not too violent, but let's say, look at here, right? We go up from here, we go down, then go up. Okay, this is one order block here, right? Cool. Now, I'm not seeing, okay, so this one is the next one. Cool. And we need to even smaller time frame. I know I want to 1 minute. Here's the order block that mitigates out of here and makes a higher high, right? So here was on the smaller time frame, even than this, high, low, higher high, right? And you see that all of these order blocks here, order block, this is the last order block. They all get either mitigated or left alone, but the market never goes below them. So the smart money are getting in at these points, right? They're getting in here, they're getting in here, they're getting in here, they're getting in here. Cool. And we create higher highs. Now here, we pretty much, I mean, this is not a very good example. I'm just trying to good, because we do break the order flow, the momentum trend line, but we technically still very deeply mitigate out of the order block. Usually it's better when we take this. If we take this here and actually break through the order block and come lower, what you expect then is a failed higher high. Okay. And the safest, I mean, from that point on, That failed higher high is always mitigation out of the higher order block. Right? So now the order flow is shifting. Instead of mitigating from the bottom, now we're mitigating from the top. So the safest thing to see or wait to do is to wait for a break of structure fully and then get in here, or break a structure in here, or break a structure in here, something. But in reality, if you see that we're mitigating out of what? Last candle that gets engulfed in the balance right here. We're mitigating out of it. So pretty much, I am an aggressive trader, like I said. So this to me is a no-brainer. Look at this, 1.5 pips. Shit. Where does liquidity sit? Equal lows. I'll take that trade. Now, when I see this, now you can come here and say, well, you know what? This is Wyckoff distribution because this is buying, or this is buying climax. This is your R. This is your ST. This is your UT, right? And then there's a test and a test and LPSY. Great. No UTAD in this case, right? So and Mike himself might be doing it differently. I'm just telling you how I differentiate. And icing on the cake, divergence with GU, for instance. And I am putting a house over here after that, because I already know everything I know. Every confirmation in the book. I'm gonna reevaluate my brain if it doesn't work out after that. If I have Wyckoff schematic, if I have the weakening, the exhaustion here, if I have mitigation, order flow shift, and divergence all matching the same time, not to mention some kind of 120.60 level, which is a quarter point, I'm in. You convinced me, especially if this is 1 minute, especially if this is like identified at 1 hour POI and now it's on 1 minute confirmation. So that's how I can identify, like, I'm not going to lie, this is extremely hard by itself, and I am still learning more and more as far as Wyckoff. Never stop learning. I'm never ashamed to admit that I'm still learning. At times, schematics are very clean. To me, the cleanest schematics are actually on the indexes. They're freaking beautiful. They're Google images almost sometimes. But sometimes schematics are really hard to see. So with any schematic, this is here, write this down if you don't know. This is a tip. With any schematic, the safest entry. So look, this is a schematic, right? This is a schematic. That's a distribution. It's a bigger reaccumulation on something bigger, but in on 1 minute, this is a distribution, right? That is possibly UTAD. That is possibly your task, but you don't know this in real time, like you said. What do? You wait for a break outside of the range. Where is the range? Here. That's your range. Once you broke through it, broke structure outside the range, then you wait for a retest, label it LPSY, or whatever the hell you want to label as a test, be my guest. But you find your true order block in here, right? Somewhere in here, maybe in here, maybe in here. You get your POI, and this is the safest entry. And man, it gives you so many chances. Look at this. Let's say you missed this because you were trying to get in where my black line is. Boom. Right? Last candle that gets engulfed with a balance. Boom. So, I mean, this is the safest entry. So if you're unsure of schematic, wait for break out of the range. Wait for a breakout of the range. Now, don't be confused though. Like, you know, with that's the hardest part in Wyckoff, hands down, is determining whether we're redistributing or accumulating. And for that, you simply need structure on a higher time frame. Where are we in the market in relation to like the bigger picture? Right? Where are we? That's why last week gold took a dump, because people were looking to buy. I know personally a person who blew an account. He's a mentor, glorified. But anyway, so he was looking to buy, I think right here on a Tuesday. And as soon as this moved up a little bit, he was all crazy and stuff. And he bought it on Wednesday as well. But if you saw the big picture of what's happening, and you saw this move and the lag, where, again, look at daily. What are we doing? Here's where we're going. Are we there yet? No. High, lower low, lower high. We were here last week. Now we might be switching order flow and going up. I don't know. Got to analyze. I still not convinced. I still think we're going to come lower. But regardless, last week we were here at support resistance. People were putting stop losses here. Look, I mean, I can't lie to you. Look, everybody in retail world are doing this stupid shit. Putting stop losses all the way here. We reached, we grabbed the stops, we came mitigated out of the last candle. Right? See that? Boom, had a reaction, but we're still bearish. Boom, 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 boom. We mitigate, probably come here, mitigate again, and come lower. Because we are bearish. And this, knowing that we're bearish on the daily, knowing that we're sitting at support, looking at this with the eyes of I understand structure, you can see this is a perfect redistribution. And then after you understand all that, you look at something like this. Give me a second. This was supposed to look like this, and I can just share it. Boom, boom, boom. Boom, boom. Bazam. Feel free to take a picture in 3, 2, 1. Those are 4 types of redistribution. I bet you haven't seen that before. And that gold looks exactly like this one. So, looks exactly like that one. So I have students even right now who are confused about Wyckoff. So don't try to match the schematic to the whatever, like to the market. Understand structure, then add the schematic as an extra confirmation. Otherwise, you're going to be a glorified head and shoulders trader. It's what it is. Like if you're trying to make it look like the schematic, you're gonna fail again. You need to understand what's going on in the market. What is people doing? Go to the MyFX book, market what is it called? Outlook, market outlook, and see what are people doing. And look, I think perfect example with CAD JPY. Oh yeah, this is doing what I was saying. So look at this. I'll show you on daily. I'll show you on daily, and then we'll wrap up right away. So look at this, right? This is daily CAD JPY. Tell me if you're a retail trader, you're not doing this. I'll slap you. That's exactly what you're doing. Tell me you're not doing this. Oh look, it's support resistance here. goddamn support resistance. And we were here, and you know what I said, and it's going to happen. I don't know when. I just know it's going to happen. This is what I said. Look at 4 hours, or look at weekly, actually. Look at weekly. Look at weekly. Yeah. What do you see? Now let's go to daily. Yeah, look at this. Right? We're even here on the daily. We were here, and 90% of the people on that market outlook are literally selling. Why are they selling? Well, because we got across X marks the spot or on right. Right? You got people selling from here. We got people selling from the trend line. Where is the move that started it all? It is right here. Move up to slam the market down. Where are big players sitting? Right here. Right here. What is a quarter point at 84 or 85 even? We're on a daily, so obviously I'm not taking a position on a daily. I'm just saying this is where we're going before you start looking for a sell. This shit is powerful. This shit is powerful. So if you're here thinking about sells, I mean, it's possible to have a reaction. Not saying it's not, but market's bullish right now on a retracement. Oh, here's another reason why people were selling. I forgot about this. This is my favorite reason. Ah, 71. I thought this was 61.8. Damn it. Joke's on me. Never mind. People were selling 61.8 before. But 'cause that's why I don't rely on fib ever again anymore. And I see this right here, 84. 84 is my sell area. Yep. CAD JPY, sorry. Yes, you are right. That is complex pullback. Man's dropping some terms. I thought you were new to smart money, or just pretending. This is definitely complex pullback. Until here. If we break this, although we shouldn't, we should at the very least have a reaction. At the very least, we'll have a reaction and have a double top before we come higher to probably this. But until we break this point, this is the point that maintains bearishness. So until we break this, we are bearish. And all of this is just complex pullback, you know. Oh, yeah. No, you're doing good, brother. You're doing good. Oh, I'm getting tired. Okay, Q, what do you do when the structure is not clear? Give me an example. Show me a chart. When is the structure not clear? Structure is always clear. You mean when you don't understand structure, you learn it. There's no such thing as structure is not clear. Up a time frame if it's not. So I can tell you that, give me a pair. Where do you say the structure is not clear? Just, you know, I want to help you. I just don't understand the question. Do you compare pairs for divergence or use? No, RSI I don't use. RSI can be used to determine Wyckoff accumulation versus redistribution and reaccumulation and distribution because it will diverge as you're doing a UTAD, then you know it's a distribution, and as you do in the spring or a terminal shakeout, then and the thing is going up, then you know it's accumulation, but not for divergence. Bye, Dr. Aja. Hope you fixed the guy's teeth today. Man, this girl is a dentist. And someone decided to open bottles of beer with their teeth. I never heard that
Sounds like
before.
my my college roommates.
Odd JPY. Okay. 1 minute. 1 minute? Is that what that 1M is? Well, yeah. So what's not clear? That's the biggest problem that you're looking at 1 minute, but the structure is clear. So first of all, if you're looking at 1 minute like this, what's not understood? Okay, let's look at this.
You gotta share your screen.
Oh no,
there,
1
dude.
month. Holy crap, this is 1 month. Sorry. No, sorry, I was looking at this
Yeah.
picture he sent. This is 1 month. So it's clear. It's clear. So you're looking at 1 month. So, okay, let me tell you this. Market in general is nothing more but a straight line. Okay. Think about a slinky that you stretch and it will go back, right? The harder you stretch, it will go back. Then you stretch it the other way, it'll go back. So that's the thing. If you see where the price is, it's at equilibrium. And the distance above that line right now and below that line, luckily, is the supply and demand area and is the equilibrium, which it always returns to. Okay. Ooh, dropping bombs, truth bombs. So on a monthly, you just worry about the last leg. Okay. So in here, your this is odd JPY. Let me go to odd JPY.
Probably easy to show with the replay tool. You cut out.
Monthly. Okay, so yeah, it's freaking nasty. And thank you for whoever complimented me for how my charts look. I try. Why I can only see it to this much and you can see it in like 90s. I don't know what's up. Anyway, so this here made a low. Where is his chart?
You marked up the exact same thing. Yeah.
Yeah.
So you got half the chart,
So
basically.
you are bearish, okay? You are bearish. That I mean, there's no confusion. This broke all structure and formed a low. This is pretty much where the movement started. That is not a legit point of structure. That is not a legit point of structure. That is not a legit point of structure. That is just a complex pullback. How do I know it is complex pullback? 2 reasons. One, it did not break the lowest point of structure, right? So we are in a range on a monthly, but the last point, what broke structure here somewhere. And so overall on a monthly, we're bearish unless we break here. So we are currently in a range, but if you notice, bearish mitigation, bearish mitigation, bearish mitigation, liquidity, grab liquidity, bullish mitigation. So at this point, even though this is still part of complex pullback and we're coming probably to grab this liquidity and this liquidity, right? You need to concentrate on on taking buys, at least as a positional trader, because from here to here, this is the next leg that formed from mitigation here. So on a monthly right now, you are in a bullish retracement up. Okay, so overall, structurally, you're bearish, but monthly is bullish because we broke the internal structure here and we keep mitigating. We switched the order flow. The order flow has been shifted because we did a mitigation out of here and broke the last order block here. So there's nothing, no confusion except for my drawing. Here, you know, Nike check mark, you're bullish. So this created this point of structure, this is going to create something else. So now you're on a weekly, you're bullish as well. Right now, you have a target, you have a target, and you keep going. So you should look for buys. Nothing confusing. You seriously, guys, instead of trying to worry about making money, try to worry about understanding what the market is doing.
Yeah, it's a big thing with Wyckoff too. You know, you can look at the schematic and you can label a PS, an ST, all this. Find out what that stuff, what those terms mean, and why they're happening. Because once you understand what's going on, nothing will actually fake you out. I mean, then you could ask your simple questions. Did this do this? Yes or no? And when you start making it binary like that, it becomes easy. With structure, did it break? No. Okay, so we made a
Well, I
lower
think
high.
people are dropping, so I wanted me to interrupt you. I just want to tell
Okay.
people how to get a hold of us, and then they can get a hold of us and ask questions there.
All right.
Okay, so at Lord Fury 83, at Ryan Billenberg, at Furious Numbers LC. If you want to join our squad, we'll welcome everyone of every background. You know, reach out to us for that. If you want to join the boot camp, you can reach out to either Mike or me. Yeah. Again, I wouldn't join the boot camp if you still shaking on just basics of smart money. But if you do understand and you've been trading smart money for a while, then bootcamp is where you want to be, because we're going to go into, you know, step-by-step details. We got PowerPoint going. We got a ton of examples, like 100 examples that we're marking up, and there's more trades obviously playing out every week. So there's gonna be more. Yeah, and YouTube.com Furious Numbers LC as well.
Yeah, I'm trying to find I'm doing that right now. Send the link.
It's actually not a slash. Like I thought it was youtube.com/Furious Numbers. It's not. Something else.
Well, there's the hot link.
All right, guys. It was a pleasure. Thank you for everyone for attending. I know I was rusty. I'm sorry about that. As far as the basics, I'll make sure that is tightened up later. But
It's been a while, huh?
yeah, man. I hope some of you got some value. You know, and always here to help. So.
Whoops.
Oh.
I just put it sorry.
Did you send it to me?
No, I sent it private instead of the whole group. Sorry, guys.
Here you go.
Sorry.
I'm putting this on the screen and I need to share it too. Boom. All right. Everyone have a good night. And we'll see you next Sunday.
Yep.
Bye-bye.